Okay, welcome everyone. Today is Wednesday, November 11th. Welcome to this live intraday strategy webinar on SB Trade Desk. Mike Boutros here with you guys. Great to be here this morning. Lots to talk about, although the markets have been somewhat static. It's been kind of slow bearing. It is Veterans Day here in the United States, so there might be a little bit of a sapping of liquidity, as Eileen was asking yesterday, but the equity markets are still open while bond markets are closed, so you should still get some volatility. The focus has been on some of the dollar crosses, but for me, still major or my main focus is still looking away from the dollar crosses. Aussie Kiwi, Aussie Yen. We talked about dollar CAD in yesterday's update. We'll definitely go over that. Sterling Yen have been in very interesting spots, and we'll continue to eye those as we get deeper into the week. Should expect volatility to start picking up later this afternoon into the open of Asia. As we get some liquidity coming back to the markets here. And we're really light on data as well until we get into tomorrow. You get the initial jobs claims here in the United States, but more importantly, on Friday, retail sales figures, University of Michigan preliminary print for November. So we still do have some stuff on tap from the economic docket. All right, so let's jump right in. As usual, any questions, trade setups, feel free to throw them out. Christopher, good morning to you, my friend. I hope all is well. He says, great to see you in the room. Permendra, good to see you as well, sir. Eileen, always a pleasure. Pietro, Kyle, Mark, great to see you guys. All right. So before we get started, a quick look at the dollar index. You can see that the dollar today is weaker against all its major counterparts, not by much. Yen, Swissy, CAD, Euro, real slight declines here for the dollar. But the Kiwi, top performer on the session, up 0.43%. Pound, which is something we've been watching. I'm stalking this for a short entry as well. We'll go over, definitely the pound crosses have been the major active play for me. And the Aussie dollar with a nice rally of 0.37% so far. The dollar index, not really changed. Again, the major break we made last week has this thing for the risk of the upside while above 12,123, the high day close for the year. If you take the sliding parallel, or if you just take a basic parallel off of that slope from the May lows, we tagged it in August, we tagged it in October, and you stretch that up to the highs that we made here in August, you can see that same slope literally last 3 days there seems to be catching the high. So I'll sort of leave that here as in focus. That's the same slope, by the way, as the operative slope of the broader formation we've been following in. So it could be a little embedded channel there either way, even on a pullback scenario. Support at 12,162, major support, and near-term bullish invalidation is still 12,123. So the broader risk is to the upside well above this region. Top side, we already talked about this. Look for that break to get you a level at the upper median line parallel, which we pivoted on a couple of times. More importantly, that measured move, the consolidation range, takes into 12,354. So the levels are pretty clear on both sides. I'm not too, impressed with the momentum signature at this point. So I was watching this to see if it gives us any guidance on a move back below that April high, but as it stands, that's what we'd be looking at for the key levels for the dollar. Mark, you and me both. Mr. Haberman saying, time for this U.S. dollar to fall. Tired of this. LOL. Yeah, Raj, again with a comment here, says, keep going higher. I hear you guys. It says Sterling is annoying me. You got to know where to look, Raj. In fact, Sterling's been offering some opportunities. Like I said, I've been all over Sterling Yen and Sterling Kiwi. I probably have like 10 trades in those just over last, just since the start of the week. So we'll take a look at some of those crosses. The sterling dollar per se, yeah, I think the rally has a little bit more upside to go, but I am still looking for an entry back on the short side there. Raj says, Mike, how many trades do you take in a day? Raj, it's completely variable, my man. I get that question a lot. I don't want to set an expectation for anyone. There are plenty of days where I'll leave the office with no trades at all. There are plenty of days where I leave the office 10 trades in. I'd say on average, I'm taking between 2 to 3 trades a day. Sometimes it's a lot more. Like I said, Sterling Yen, I've been on the long and the short and the long for a couple of days. Sterling Key also have a couple of shorts. Haven't really played the long side on that one. But it really is variable on whether I'm in front of the platform and whether I'm there to take the positions or not. But it's also, Raj, you have to just keep in mind it's the market conditions. If the setup is there, I'm in. If the setup is unclear, we don't have clear triggers for 2, 3, 4 days, then I'm sitting on my hands, right? It's not a game. We have to be as disciplined as possible. I know that's hard, especially for near-term traders, but you got to do it. Everyone is saying that they want to short sterling, but how do you know when to short? When to short it because it holds at each resistance level and then pops higher again. So Raj, it depends what time frame you're looking at. And let me just bypass that question for now. I'm going to put that on hold. We're going to look at the sterling crosses. Let me just get through the dollar CAD and Aussie Kiwi, and then we'll get up all in the pound. Okay. I understand your frustration 100%, man. No one, no one gets aggravated from near-term price action like me because again that's sort of my bread and butter. So I hear what you're saying, but you just got to shift your attention. If sterling dollar isn't offering the opportunity, let's shift sterling Kiwi. We've been watching that one. If that doesn't offer the opportunity, sterling yen's been on the menu, right? And that's why I offer both of us, me and Jamie, put out all of these ideas, right? You know there's plenty of opportunity across the board. We just got to know where to shift our focus. So sorry, I went on a little tangent there, but we'll jump into those trades for sure, Raj. Mark saying you have to trade like this lately, market. He said, yeah, you just said it. Yeah, you know what I'm talking about, Mark, right? All right. So with the dollar picture in mind, we have the dollar index at resistance. Interestingly enough, I'm going to just jump really quick into one of the radar charts from last Tuesday, or Monday rather, dollar yen, right? That level that we highlighted still offering some resistance. So sort of working with an analog on the dollar index works pretty good on this one. See a little bit more of a pullback. Dollar yen didn't give us the juice we were looking for. I put out a scalp report on this on NFPs or on Thursday, right ahead of NFPs. We were looking for a little bit more of a, what's the word? Of a reaction off this 123.40, 123.50 level. So it's been kind of lackluster on the bounce back. But just to put things in picture with what we're looking at in the dollar index, sort of makes sense. Eileen says, what do you mean working on the analog? So just using price action similarly, what we're seeing in the dollar index hitting resistance, and then dollar yen on the daily basis coming into a major level of resistance, right? So it sort of makes sense, Eileen. If the dollar pulls back a little bit, that'll be sort of a nice indication, rather, for the dollar yen to possibly see a pullback again. Near-term support 122.44. Key support is that region 122.11, 121.83. This region. All right. Eileen says, well, new term for me. Well, maybe analog is not the right term I should be using on this one. Analog, we really use, Eileen, when we're trying to look at previous price action historically and use that as a mirror of what's happening in price action now. That's really the more common use of analog. Be a little bit more proper with my speech. Okay. Let's jump into yesterday's update on dollar CAD and Aussie Key. Raj saying sterling, here comes a sterling drop, Mike, only in the 5-minute though. Let's take a quick look if that's what's happening. Yeah, I think you're looking too close at price here, Raj. Well, actually, a trigger just did give out. So I am looking at that. I really don't like jumping into positions right here. I'd rather wait a little bit deeper into the US Open session before I start taking position. But there is a trigger break. Momentum is holding 60, so the hallmarks are there. I just don't see anything compelling in price action just yet. Keep an eye on that. All right. And one other thing, Raj, and it's very important, what time is U.S. session? So the U.S. Futures markets open at 8:30. That opens with this webinar. But the cash markets, equity markets, all these open at 9:30. So typically the 8:30 to 9:30, 8:30 to 10 range is typically what I like to look at for the U.S. opening range. One other thing, Raj, keep in mind when we're looking at these triggers, guys, and we're looking for entries, the ideal entries and the ones that will more, the higher probability that we'll get into is when we get these at resistance or major key support levels, right? So if I were to get a trigger like this when price is up at 152, that's a different ball game from down here. Remember, I'm only looking for about 25 pips. I could put my stop against the high, but then again, there's not real concrete resistance here that we've highlighted. So there's nothing to keep this thing from going right into here, stopping me out and turning over. Remember, when we're working with a near-term trading strategy such as this, entries are the most critical thing, even more than exits, because you're working with a tighter stop. So you need to really nail in those entries. So even if this trigger were to give out and prices were to drop, this would be a trade I'd miss 9 times out of 10 because the entry is not compelling enough for me to get in. Right? Remember, momentum, RSI, stochastics, MACD, these are all backwards looking. So what matters is when we get those triggers and price is at an important level, not just the momentum. So quick note there on the sterling. I would be looking for a probe higher into that 52 before we turn around. Mark with a little note for you there, Raj, saying, Raj, just keep in mind that these webinars are intraday, so we're looking for just a quarter of the daily ATR. And Mark makes a good point, right? So because we're looking for these real near-term entries or near-term targets, we got to make sure that the entries are nailed on. All right, so let's get back to business. First things first. Here's what dollar CAD looks like, and this was the reason for yesterday's piece. It's a compelling case to be made on this. Raj saying, nice one, giving you some props there, Mark. Love the back and forth, guys. Great. But this is something that we looked at yesterday, and there's a compelling case to be made. So I know that Jamie and Mark, you guys have it drawn like this. The pitchfork catches the highs, and that's still guiding price pretty well. But here's an interesting tidbit. If you take, this is the slope we've been working with since the start of the month, essentially, right? If you take that same slope, okay, and make a sliding parallel off the high, it's been guiding price like no one's business. It's the same exact slope. So whether you draw it on the little bit more of a deader slope, which gives you inside, the only reason I don't favor this one as much is because it's really messy towards the median line there, whereas the operative slope I've been working with caught the highs, caught the lows, and you saw not only that breakthrough, but even a tag of it as support before you moved into it. In any event, both ways of drawing it highlight this slope right now. Okay, this level was a nice confluence region. You're looking at magenta here. This is actually the October open price, confluence with the 764 retracement, a decline off the September high. You also had the median line of this formation off the lows right there as well. So there's a lot to sort of keep in mind here for this trade, and the risk is to the downside if we break this near-term support. Here's what the daily chart or the intraday chart looks like. Really clean weekly opening range. Here's your weekly open. Weekly opening range high comes at resistance, same level. Just so happens that same region at 133.08, 133.11, look what else is there. An exact 1618 extension off the lows. So even the nature of the advance, 618, excuse me, has given us a nice Fibonacci ratio resistance. The pullback, you now have a clean opening range for the week. Momentum also confirming that opening range, holding 40 support, holding 60 resistance. This thing is primed. We just need the break, or we just need a simple conviction trigger to get in. The ideal scenario, the preferred scenarios for a downside break off this region, looking for targets at 132.17, more importantly 131.76, which coincides with that same former upper median line parallel as support and the current median line off the low right there. That coincides right into the close of the week, early next week even. If the break is a little bit more sharp, if there's more fervor to the downside on it, you'd be looking for this region here, 31.43, even more confluence at that region. And this is all still within the confines of the uptrend. It's too early to tell whether this is going to materialize into a full dollar CAD turnover. In fact, it's probably not going to. But from this standpoint, you have a very clean weekly opening range, like I said, and the risk is to the downside while below that same slope that held price for a couple of months. All right, so I'm largely looking for like short triggers into this region. If we break through 33.10, 33.13, you're basically looking for the August highs. You're looking for an 88.6. This is a soft target at 33.85. More importantly, the high day close for the year comes in at 34.20. So the levels are super clean on dollar CAD finally. And we just need a little bit more conviction on what we're doing here in momentum. Christopher Hudson says, happy that you are looking at the same dollar CAD setup. Just haven't gotten the trigger yet. I'm right there with you, man. I'm watching this one like a hawk. Mark says, good point. What did I miss? Oh, that was about the median lines, right? Yeah, so they're highlighting the same thing in my book, Mark. Whether you're using that larger median line off the highs or whether you're using that sharper one I've been using. Yeah, the sliding parallel, yep. So, not only that, but this break here, it charged a move, right? And at this point, it highlights this 31.75 level that we just talked about, and that's going to be the confluence of the 50% retracement of the advance, and that same upper median line parallel resistance, now support. So let's see if we can finally get some downside play on this. The initial break below 32.45. You're looking at this yesterday on that move to the downside, really hairy. If you brought in a 5-minute, I'm not going to lie, I was really tempted to do something here on a pullback to try to get back on the short side because the break was the break we've been looking for of the weekly opening range. This is exactly what we highlighted on the chart yesterday. We were looking for a break below this region. But on that move, you saw that momentum on a 5-minute chart didn't give you anything. We were already below 40. There was no trigger on the downside. This is would have been a tough one to get into. Good thing you didn't, because you saw a nice rebound off it, but it further validates and further gives us a little bit more conviction on playing a break of this initial weekly opening range. Even on the near term, guys. It's a nice sliding parallel here of the same slope. Support, support, resistance, resistance, support. A break below this level now invalidates the weekly opening range and would invalidate that sliding parallel as well. Inherently, you'd be looking for a drop into the lower median line parallel. All right, so I love dollar CAD. I'm just waiting, hand on the trigger, looking for this one. Christopher Hudson says, so many ways to draw MLs. Gives confidence when someone else draws it the same way. Support and resistance is all about agreement of market participants. Yeah, I'd agree to that, Chris, and always gives me, any trader, confidence in their analysis when they kind of look at another trader, especially one who's been using it for a while, and they're kind of looking at the same exact thing. So I hear what you're saying. All technical analysis has some issue of subjectivity, and that's why, Chris, that's why we're here. We can go on Twitter right now and find a million different opinions of a million different people and how they have their trend lines drawn and what their opinion is in the market, but try to stay as objective as possible. Have a strategy that has good risk management and good discipline, and if anything, it's more of an art form. So it's great that we're on the same page on that front. All right, dollar CAD's done and ready to go. So we're looking for this turn. We'll see if we get it. Watch this opening range, 32.45 support, 33.13 resistance. Aussie Key is another one that's been on the menu. We highlighted this in the radar charts earlier in the week. Mark Haverman says, that's why these webinars are so good. You are a more experienced trader and you keep your objectivity better. I do my best, Mark. I appreciate that. Here's Aussie Kiwi. The level of focus remains this 107.23 barrier. I cleaned up this chart a little bit for yesterday's piece. If you recall, there was a 618 extension we were working here that brought this level down into 107.13 as well. Now that we're further out in time, the slope here is a little bit higher and is exactly on that 50% at this point. So major key support focus is 107.23. It dribbles a little bit lower, or it dribbled a little bit lower yesterday. Here's what the intraday chart looked like on Aussie Key. All right. You can see that spike low. There was a crazy gap like late in the day in New York. I was just watching this chart. I had just closed out a sterling key short, and literally a second later, this thing like ripped. I think it was mostly Kiwi weakness. You saw sterling Kiwi rip just as high at the same time. I'm glad I was out of it, but the point being that rebound came right off that operative slope in dark orange here. Not only that, in overnight trade, we dropped into it again, same region. So on this one, same thing as the dollar CAD. You now have a really nice weekly opening range right above support. Okay, sort of the focus would be on a downside break for a tag of this parallel off the lows. That coincides with, I mean, this is such a clean play in general. That coincides with this sliding parallel into the close of the week. Or this is actually, excuse me, into tomorrow. If we find a little bit more of a long trigger again as we come back into this region, we can play the range, but really a topside break is what would give us a little bit more conviction. Remember, we're working under the premise that this rebound was pretty big. Okay, this was a pretty big rebound. That's the largest range that we've seen since September. It took us back above the 200-day moving average, back above this crazy slope we've been following, which again has defined so many major turns in the pair. So the risk is still for a push back in towards 109. And this is going to be your near-term bullish invalidation. So that's the bottom line of the trade. If we break back below this, you're risking a drop right back into 106.46 on the intraday chart. There's 106.40s, the 618. It's just ridiculously clear. If you top side break the weekly opening range, specifically through 108.45, then you're looking for that breakout right up into that 109.20, 109.10 is the longer dated 38.2 as well. So another one, primed for the pump, just haven't gotten the position yet. Could be a bull flag. In any case, we are looking for a rebound off of this slope, and we're now testing it as support. Initial play here looks good, but we'd need to get a little bit more of a shift in momentum. We saw that we held 60 on the rally here and turned right back below 50. So at this point, actually, I probably want to keep an eye on these triggers. You know, I don't like taking triggers off of divergence. I like taking triggers off of the low in price. So I don't have a support trigger here per se, but if we do get a drop back into this region and you get some nice long triggers against that low, might be a nice way to play that range to the upside. But we're broadly looking for a breakout of here to get some near-term directional guidance on Aussie Key. Christopher Hudson has a question. Says, Mike, when deciding which trade to take, ATR would be the tipping point, I assume, right? Dollar CAD and Aussie Kiwi are equally clear at this point. No, Chris, I wouldn't say ATR would be the tipping point. So ATR is just a gauge of volatility, right? I wouldn't say that's a trigger by any means. ATR just tells us what we should be looking for on average per scalp. There's 4 major sessions throughout the course of the day. For intraday trading, it makes sense, take about a quarter of the daily range. When I'm looking at a various spectrum, if I'm looking at like 4 or 5 different pairs, certainly I look at the ATR because I'd rather take an ATR that gives me a little bit more of a cushion. So if there's 2 setups and they're equally clear, I think this is what you're asking. One of them has a 28 pip ATR and then dollar CAD. What's it now? 27 pip ATR. So they're about the same, right? The most important thing, Chris, and nothing else surpasses or nothing else supersedes price action. I don't care about indicators. I don't care about oscillators. At the end of the day, if you put a gun to my head and tell me what you're making your decisions on, I'm going to tell you it's just price action, straight up, support and resistance. Now ATR, momentum, these are tools that we can use to help us tweak our entries to help us identify how much we should be looking of the trade to take. But when looking to decide which pair to trade, it's all about price action, Chris. It's all about which one's giving me the clearest trigger, which one is at the best level to trade against. So if this trade, for example, well, I guess they're both pretty similar, but if dollar CAD, for example, came into the weekly low and then gave me a real clear cut long trigger off that region with momentum holding 40, that would be a trade because we're against the weekly opening range low, right? Whereas for Aussie Key, and this is just an example, guys, by the way, for Aussie Key, even if I were to get a long trigger right off here, right, the trade is not at a key support structure. So I'd rather be on a pair like this, I'd probably favor going back and taking the dollar CAD just because it's at a better level for entry. Chris, does that make sense? I hope I'm not confusing anyone. It's all about where the trade is and how clear the triggers are. ATR is just something that we gauge as sort of an objective view of how much you should be looking for the trade. Because it's interesting, a lot of people will take a trade based on a trigger, and then you ask them what their target is, and they'll be like, oh, well, it's down here at 105. Well, guys, that trigger has no implications for a longer term swing like that. So for me to be able to look at something and be like, okay, well, there's a trigger here, quarter of the daily ATR is 28, that makes sense. Let's try to play that. So Chris says, of course, it wasn't a great question, but you gave the answer I was looking for. All right, that's all that matters, Chris. Cheers, mate. So that's Aussie Kiwi and dollar CAD from last night. The levels are super clear. Hopefully we'll get some definitive price action on both these to clear the way, but Aussie Kiwi looking for a possible rebound off that region. Dollar CAD looking for a breakdown. If we can hold below this slope, I think would be a nice play for a little pullback here in the greenback. We've been watching crude prices in combination for dollar CAD, obviously the implications of that relationship. So quick look at crude prices. That same support we've been talking about, it's still being tested right now as we speak. 43.18, 43.52. We talked about this yesterday. Basic trendline support. Median line parallel off the decline from this turn. The 50% retracement of the advance. And longer term. Up. The 618 extension, there it is, off the high, and that's 43.18. So you're coming into some support here. If you do get a little bit of a rebound, you would expect to see some possible CAD strength on a move like that, and that would just give us a pullback that we're looking for in that dollar CAD move. All right, let's jump into the radar charts from last night. Raj says crude at support. Yep, you're absolutely right. Okay, dollar yen we touched on real quick. Let's jump into the sterling crosses. So I want to just touch back real quick to the intraday update from yesterday, or the previous day rather. Where is it? Here we go. On sterling key and sterling yen. So here's what the sterling crosses. Well, let's jump into the sterling dollar. I know Raj has been kind of frustrated with what's been going on in the pound. So here's what it looks like, Raj, on the daily chart. We talked about this early in the week, guys, and I know the swing trades are looking lower, but they're working with a lot more room. Jamie has a stop, I think, at 53 still. So you guys have the room. Intraday price like this shouldn't really bother you. From our standpoint, the pivot back above 51.25, the low day close for October, sort of invalidated the immediate downside bias for us. Now, the break below this broader median line that we made last week, this was huge. And actually, we talked about the short bias there. Took out all the scalp targets that we were looking at. The last one, I think, was at 50.65. And here we are pivoting back above this region. Sterling could have a little bit more upside to go. Ideally, I think you find some short exposure or some short triggers near 52.50, 52.60 would be a basic 618 retracement. You're then coming up on that same pivotal long-term slope. And basic slope support, now resistance right up there as well. So we'll see. I'll show you the scalp chart in a moment. The scalp chart has, or the intraday chart has resistance coming a little bit more forthcoming right around here. But on the broader picture, we have to be prepared that this is kind of the picture we're looking at in sterling dollar. Today's dollar weakness is kind of propagating this, I think, a little bit more to the upside, which is why I'm not, blanket bearish against all the sterling crosses. I still think that there's more upside here, possibly on sterling dollar, not so much on the other crosses. But here's what the intraday chart looks like for British pound. Near term, 52 into 52.20 would be a nice area again where you can find some near-term resistance. So Raj, you were pointing out that there's a trigger here when the session was opening 20 minutes ago, right? Here we are testing the session highs again. Actually, let's bring up that 5-minute chart. Okay, so this is why we don't take triggers, at that time of day yet, because we're just setting up the opening range. Here we are right back at the highs again. And the major resistance, if I were to get a trigger like this up here, that's a different ballgame. Okay, what is that level? It's basic 38.2 off the decline off of last week's high. But more importantly, it's also a confluence with this 1618 extension off the high and the former lower median line parallel of this formation. All right there. All right, so a region like that, and especially if you get some divergence into a trigger break at resistance, that's someone giving you a steak on a silver platter. If you don't take it, you don't take it. But those are the ideal setups I sort of look for. So we'll look to see if that 52 region gives us some resistance. I opened it up into 52.20, not because of just because of the fib confluence, but even if you look in price action back here on the 5th, look what happened. We actually spent a good 6 hours in that region. So it also catches the lows just about from back here on that October dip. And you can see that whole region here. Some nice peaks and some nice lows. So long story short, this is where I'd be looking for some interesting short action or some interesting triggers. Again, 52.65. If we break above that, don't want to be looking lower anymore. You'd risk a lot more of a substantiated press back into the upper median line parallel at that point. A basic trendline support also, I just added this morning, a basic trendline support off the September lows also literally caught it to the pip. So pop higher, look for some short exposure, some short triggers up here. We'll try to see if we can get the downplay again on British pound. Any questions for the sterling? And if we do get those triggers, this would actually be a nice target. Not only was it the Asia low from last night, London low, it's also basic 236, trendline support, and the former upper median line parallel here. And that's basically like 51.30, 51.25. So I do like the pound levels. Look for a turn here. Okay, Raj says, will you be shorting at 52.50 for a larger position or only do short-term trading? So Raj, the way I do it, man, is this. Look, if I get a decent trigger and I'm in the position, let me take a step back, and I don't want to divert too much from price action because we're running low on time, but this is just a quick note, guys. The biggest mistake people make is that or retail traders will make is that they're very quick to pull profits and they're very slow to cut losses. Now, when working with an intraday trading strategy, that problem is exacerbated with retail traders because they're very quick to pull profit, as they should be, because they're looking for intraday trades, but the losses still run. So one thing we always want to do, we always want to put ourselves in a position that we're able to take advantage of the broader move. So the way I always play it, Raj, and we talked about this in the webinars before, is that let's say I take a short here. As soon as we get a 25 pip ATR, I'm doing something, okay? I'll be taking off a quarter of the trade, bring the stops to break even. If we get into this region, I'd probably be looking to take off another half of the trade. Keep the stop at break even, and I'd be leaving a limit down here at the next target. So I'm always positioning myself to give that leeway to play a run. But, you know, you don't put entry here, stop against the highs, a limit down here, and call it an intraday strategy. Okay, because what we're doing is we're playing the stretch. And I'll show you the benefit of this in Sterling Key and Sterling Yen in just a moment. I played that range like 3 or 4 times. That's the beauty of the strategy, is that, okay, let's say I take off another half here and it rallies and it stops me at a break even. No problem. If I get back up here again, I get another short trigger, I get to play this range again. And in such a way, where one trader would take a long here and take his exit, we've been able to play the same range 3 or 4 times, and that maximizes sort of being able to take advantage of intraday price fluctuations. So that's one thing, Raj. Secondly, I'm not going to just put an entry at 52.50 and and jump into the trade. Our strategy is much more near term. I need a trigger in price, and I need a trigger in momentum to tell me to take that position. So it's different from a swing trade mentality. We want to make sure that we're distinguishing the way we're trading. We don't want to mesh any two strategies, guys. Specifically ones that are a little bit more on the intraday that are following momentum, and other ones that are larger base structure trades. So all the trades that we do, by the way, guys, me and Jamie are always on the same page with this. They're inside the same setups, essentially. So he's looking for the larger swing. I'm looking to play the intraday levels within those structures. So there's a little bit of a different play there. Raj, I hope that makes sense. So if I get a trigger here in 52.05, 52.20, the initial target would be 25 pips. 51.25, 51.30, I'd be looking to do something. If not, bring my stop to break even, at least take a little bit of the trade-off. And then if we get that subsequent break, great. I'll continue to ride the position. Good questions. All right, so that's sterling dollar. Let's go into some of the sterling crosses. So sterling yen, or I guess sterling key is the big boy here that we've been playing with. This guy, the range, quarter of the daily ATR. A daily ATR is 291 pips. So a quarter of the daily ATR is showing you some 74 pips, 73 pips, and you're basically looking for a break either above 231.74, 231.70, or a break below 230.40. This was from, I guess this is Sunday night, right? Here's what sterling yen looks like now. It's been messy because it kind of drifted out of that position, and we adjusted these levels yesterday to use more these operative slopes that we were working with. So if you guys remember in yesterday's webinar, we were talking about the fact that once we broke, whoops, sterling key. We were talking the fact that once we broke above this, that would be the bearish invalidation level. At that point, you'd be looking to play 235.52, 233.10. This was a great position to have on a short off this region. We talked about that in the webinar yesterday. That got closed out. There was another short trigger as we tried again. This was the one I closed out right ahead of that crazy spike. It's a good thing I did, because that would have taken me out. So that's 2 shorts we've taken in this same region. And then there was actually really another beautiful trigger coming into Asia last night. I didn't get to catch this one, but on a 5-minute, there was an obvious break of not only the weekly, not only the session opening range, but also a break back below that parallel. And that was, again, this looks like a little range, but even from here, 231.30 to 230.70, nice 50 pips. And you would have held that into the next target, which was 230.37. So a trade that hasn't broken the weekly opening range, it's set, it's clean. I really can't stress these median lines anymore because we've been kind of like dilly-dallying all around it, but we'll keep them there for reference. Bottom line, I've been looking for shorts against 231.70, 231.74 every time we approach it. So you can see that the momentum signature still, it's struggling. You've seen some 60 breaks here, but even on this rally, some divergence, right? Price action making higher highs, the oscillator holding those highs. And in fact, every subsequent high we've made since has continued to see lower momentum. And here's the last turn right ahead of 60. So I'm still looking lower. If we do get another short trigger, 230.37, like I said, 229.33 is the next target. That coincides very nicely with basic trendline support just off the lows there. This is actually parallel support of the resistance here. So a much wider range ATR. If this is new to you, you kind of want to work with ones that have a smaller ATR. It'll hurt less when you sort of take a bump as you get through the learning curve. But if you're comfortable, man, it's been working out well. It's been working out well. And a trade like this, Raj, here's a perfect example of why we don't want to just take a trigger on a near-term trade and stick with it for a long-term position. If I had done that and I was stubborn looking for a move into 229.30, I'd be at break even, if not at a loss at this point. So we want to make sure that, we keep our expectations. I don't know if the market's going to break down that low, but I know that I'm looking at near-term price, and the efficacy of those strategies and the efficacy of those triggers are only for that near-term price action. So hope that's clear. Any questions on Sterling Key before we move off? Raj says, how will you get into this trade? Wait for the trigger. It's always wait for the trigger. It's always wait for the trigger. Let's see what the near-term chart looks like. Here's the 5-minute. Okay, so there's a trigger in price. U.S. opening range is pretty big already, 3160, 30, it's about 60 pips already. So here's the way that you would want to play this. If you get a rally back towards the opening range high for the U.S. session here, and on that rally it holds 60 as it has in the last rally that we made here at the open, and you see a decent trigger to the downside, okay, maybe it's this trigger, maybe it's another one, but this is a trigger I'd be looking at. If we rally towards that high and you get that trigger, you could put a stop against 3174. Great, that might be an opportunity to play another short. If I miss that trigger, or let's say, Raj, that opening U.S. market opens, this thing just collapses, I'm not going to go chasing it. I'm not going to just throw a short in there and try to play the momentum drop. That's just, gambling. If that happens, I've missed a short. No big problem. As we come into support, we'll look for some long triggers. If that doesn't hold and it breaks, again, I can't jump into the trade. Maybe we'll look to play the rebound off that at this point. Do you know what I mean? The point is, he says, very useful. Thanks, Mike. Yeah, no problem, Raj. I'm glad you're asking these questions. Eileen says, thanks. I had the same question. So the point is, you're not going to catch every move, and that's fine. The point is that you get the conviction for the hold of resistance or the hold of support, then you look for a drawback to get back in. 9 times out of 10, that's the way I want to play it. So U.S. spiked into a high, you came into a low. If we test the U.S. opening range high and you get a short trigger and it fails, it's a great stop, great entry. If it just breaks down, we were right on the direction, didn't get the trigger, no problem. Market will provide more opportunities. And this is why I'll have 3 or 4 setups every day that I'm looking at, Eileen and Raj, because, you're not going to find the trigger on one, or it'll break and just run without you. And so we have 2 or 3 other trades that we're looking at. You'll get one of them. Eileen says, thanks, Raj. I had the same question. Raj saying, is Jamie doing a webinar today? Yes, guys, Jamie is doing a webinar today, regular scheduled time for the midweek strategy webinar. I do also want to remind everyone on the homepage, we do have the announcement for the platform walkthrough on IDO search. So on next Wednesday, November 18th at 2:30, after Jamie's midweek strategy webinar, we're going to be doing a platform walkthrough of the IDO search engine. Guys, that is a tool that is available for everyone who is an SB subscriber right now. After we do this platform walkthrough, after a couple of days, we're going to go live with that subscription, so it'll be a separate added cost to get SB Premium and access to IDO. Everyone here has free access for the life of your subscription. It's a really powerful trading engine. Unfortunately, I can't, it doesn't open until 9:30, so we don't get it in for these webinars, but it's a really powerful engine. This was originally produced or created to help sequence the human genome. They've applied it to all financial assets, in fact, and it's been an amazing product. I mean, they work typically with institutions. This is their first run at the retail base, and it's exclusively, excuse me, through SB Trade Desk. So we're really excited about it. We hope you guys are too. Again, everyone who's here has free access, so I encourage you guys throughout the course of the day, go check it out. It can really help validate a trade idea that you're looking for, help point us out to some opportunities we might not be looking at. They don't really get as granular into the intraday forecasts, but they are working on that for swing trading, long-term trading, medium-term trading. It's awesome. I mean, it's as close to institutional as you can get for a retail trader. Not only that, it also does offer daily research. They have research on best performers in stocks, worst performers, major releases that are coming from earnings, best earnings. And there's some really interesting stuff at the bottom there I encourage you guys to take a look at. How do you get your scrolling Twitter on the IDO page? I'm not sure what you mean, Eileen. This is just on the homepage when you're not logged in. It doesn't have SB Squawk. This just has a compilation of me and Jamie and the SB Trade Desk handle, Eileen. So, and it is a WordPress plugin. So you're right, Mark. Raj says, yay, he sounds so calm when he's talking. You guys must be so patient. Do you ever get frustrated when you have a losing streak? Haha, he says, Raj, absolutely. But the most important thing, Raj, is that you don't let that frustration filter into your trading. If I'm frustrated, all right, let's go to the bar tonight. We'll have a couple of drinks. We'll knock it off. Go to the gym, work out, do whatever you need to do. The worst thing you can do is filter that frustration into your trading. So I just keep them as separate things. No one likes losing, Raj. Losing sucks, right? But if you're someone who can't take that, then you're in the wrong industry, my friend, right? You're going to have losing trades. No one's going to be 100%. It's how you deal with that really makes the biggest difference. So that's why we might seem so calm. Again, we're benign. The market is what it is. And that's what we got to do. You're a funny guy, Raj. Never drink while trading, says Mark. LOL, your risk sensitivity is not optimal. No. I didn't say mix the two, Mark. All right. So anyway, back to price action, guys. I did just want to drop that reminder. Again, next Wednesday, don't forget, on the 18th, we'll do that walkthrough of a more in-depth look at the IDO search engine, how we can apply it to our trades, how we can really utilize that amazing piece of software for our benefit. Okay, Aussie Yen we've covered, or Aussie Kiwi we've covered. Aussie Yen did make a break. So here's the difference between Aussie Yen and Aussie Key. Aussie Key is holding that major key resistance. Again, remember, this is a 618 retracement, 618 extension, huge. So if we do break, like I said, the targets that we looked at yesterday are going to be the same ones. Nothing's changed on this. Sterling Yen, which has also been on the menu, haven't traded this quite as actively, but I did take a couple of shorts. We talked about this yesterday. I got stopped out on the break even here for this dip, or this dip rather. It didn't trigger the limit and actually took me out here at break even on the rally. We talked about that yesterday. It's been the same range. So there was another short opportunity that we jumped into. We're out of that. And overnight, you broke above the opening range high for the week. You broke above the 100% extension, and you broke above that sliding parallel. Let me just zoom this out so you guys get a picture of the structure. All right, so now you're testing that 186.94 target, and this is a big region near term. Not only is it a swing high here, it's a 786 retracement off the highs from last week, but more importantly, it's the September high day close. So this is really big near term for Sterling Yen. If we pop through, I got nothing until 187.55, 187.66 is the high for the month. So again, I'd actually still like to be looking for a possible short exposure against that region if we get it with a break to the downside. But as it stands right now, you're testing resistance. You're testing resistance. All right. Sorry, guys. Give me one moment. Good to take risk here. A small one, a very small position, says Raj. Raj, are you talking about sterling yen? He says, yeah. Yeah, I like it. I like a little bit of a pullback, something like this. A quarter of the ATR here, about at 34 pips, so you do have the allowance for it against that high from overnight. I was just about to, let's see what the intraday chart looks like. Sterling yen. Don't really have too much of a decent trigger here. All right, here's the 1 minute, and on this one, I think it's a little bit clearer. Your stop would be against the highs here at 187.05. Yeah, if you get a decent trigger break, what I do like is that you're seeing some slight divergence, real slight. And again, when you're looking at divergence, don't look at the wicks. It's all about the close. So you can see price action, higher high, the oscillator, lower high. Wait for that candle break on the 1 minute. If it does give us a trigger, that might be a decent short. The only thing is you don't want to get too aggressive, okay, because you haven't gotten a range break yet. We could come right into the opening range low, hold, and blast through the highs. Very likely scenario. Sterling yen's a crazy pair. So you want to be light. Even if we come into the opening range low here, I would be looking to do something. Take something off the table. Take a quarter of the trade, half the trade, depends on what your risk tolerance is. And at that point, bring your stop to break even and see if it pulls through with a breakdown into 86.37. But I would be looking for this trigger. Yeah, might be a decent play here. We'll keep that on view. Sterling dollar has more divergence than sterling yen on the 5 minute. Sure does. Let's drop that trigger line to there. And very similar setup. Very similar setup. But like I said, with sterling dollar, I really do want to see if we can get into that real cozy confluence region. You know, the pound is notorious for being an institutional market. Like the guys really can push this thing around. It's notorious for the throw over of resistance, for the false breaks of support. So I get really timid from trying to take a position right ahead of a key region I've been watching because the likelihood that it soars through it then goes in the direction I want. So I'm a little bit more lenient on as far as sterling dollar with waiting out the entries if I can. If I miss it, I miss it. But I'd be looking to see if we can find some resistance there. Mike, what's a good target for crude to upside? I am long. Finally, crude breaking, says Raj. I wouldn't say breaking, rebounding, right? Yeah. So to the upside, I'd be looking for. So right off the bat, I would take a retracement off the high. But before I do that, I do want to just check out a couple of different things. All right, so I'm going to move this to that swing low from October 15th. And then we'll take a quick retracement off the high here. That's pretty nice at 45.20, 45.29. Basic 38.2 off the high, and just testing that swing lows. Real nice pivot in price from August and late No, it's like this all in August trade. That comes up at 45.29. The big thing would be a pivot back above that median line in blue. That would suggest a lot more, or suggest to open up a little bit more of a conviction long towards 47.70, which is a 618, the entire range. But that's what I'd be looking at for near term on crude. Raj, he says, I was thinking 45.87. 45.87. So the 50 is great. That actually coincides with that median line in blue that we were talking about later in the month. So it depends on what kind of rebound we get here. But it's definitely a level I'll be looking at, for sure. Absolutely. Ahead of that, though, watch 45.29, 45.21. That swing low that we rebounded off of, and the 38.2 confluence. Hope this time it's genuine upside move, says Raj. Raj, hope is a dangerous thing, my man, when we're trading. We're objective. You get into the position, you have a defined risk, you know what your target is. The market's going to do what the market's going to do, and the market's always right. Right? All right. We are up on time, but I do want to just quickly touch on, there's a couple things that we didn't get to. Aussie Yen, I put out a piece on this on Daily FX yesterday, guys. I hope you guys saw it. Here's what we're looking at with the daily prospect for Aussie Yen. I'm not really too convinced or too crazy about the daily chart, but the intraday is much cleaner. So you can see these median lines off of last month's high are sort of what the focus is. Major key support is 86.12, 86.27, and the upper median line parallel or trend line resistance. We've been looking for a break of the opening range here. So for Aussie Yen, on the intraday, the levels are much more, much more interesting. Okay, so here's what it looks like. And it's one of those ones that are, again, super clean. So if you look at this operative slope, all of these are parallels off that same slope. And basic trendline resistance off the high is the same parallel. The highlights 87.07 into 87.13 as key resistance near term as it confluences with that trend line. And key support in the opening range low, 86.47, 86.50. And there's that 618 that we talked about in the daily chart. So the levels are super clean. If you see a downside break of support, that's your next target. If you breach the highs here, you're likely to see a much more aggressive continuation higher for Aussie Key. You'd be looking for a rally up towards the high day close from October. That's like 88.35. 200-day or, 100-day moving average comes in at 88.25. A downside break, and you'd be looking for a run on the monthly low, 85.46. All right. Or here's 85.46, excuse me. So that's sort of the key ranges that we're watching here in Aussie Yen. It's a similar play on some of the Yen setups, but I think this one's exceptionally clean. Exceptionally clean. Decent ATR, nothing too crazy, 23 pips. So, we'll be looking for a little bit more of a conviction level to play off of. Ideally, you'd either see a break there to validate the shift to the upside. You'd be looking to buy pullbacks, or a short trigger into this region might be the best way to play it. Mike, quickly, euro dollar, please. Here's a quick look. Okay, I'm just going to touch on it. I don't like it. I just don't like it. There's nothing here for me. We're at major support. We've been talking about this sliding parallel for the last couple of days. I don't know what to do with this. There's not enough conviction to play a rebound higher, and it's a downtrend at support. I mean, there's nothing here for me. If we break lower, 106.04, depending on where you are in time, that confluences one of these median lines. Resistance, low day close for July, that takes into 108.18. Key resistance at this point, I'd like to lower to right around there, about that 236. Okay, euro dollar in the intraday, I got nothing. And it's nothing compelling either. Momentum is all over the place, sub 60 now above, or sub 40 now above 60. The weekly opening range is not really tighty. You haven't got an equal high check. You haven't got an equal low check. So I got nothing here, guys. If anything, if you put a gun to my head and say, Mike, what would you think? I would say, look, if it breaks the opening range high and that confluences with the median line we've been watching here, like here, yeah, sure, you might get a decent rally back towards 108.60, maybe back towards the 109 handle. But other than that, it's a downtrend at support. Very simple. Mike says, Raj says, Mike loves the gun, his gun. It's the only way I can say with reluctance that this is what I would be doing if someone told me I had to. But not on my radar these days, Raj, for Euro. All right, we'll wrap it up here. Best of luck trading here, guys, today. Again, keep in mind, Jamie's up at 1 p.m. Eastern with the midweek strategy webinar. You don't want to miss that. And we'll be back on tomorrow to wrap up the week with one last intraday strategy webinar. So best of luck trading, guys, today. I will see you bright and early tomorrow morning. Cheers.